Hello everybody, this is Derek. Hope everyone is doing magnificent. And in this video I'm going to be comparing sports gambling and stock market trading. Very interesting subject in my opinion because I'm trying to compare the two, and to me I find sports betting to be a safer play, cheaper on the vig, and much cheaper on the bankroll. Now, the kicker with both of them is the same, that you need to be skillful to do it. You need to have money management skills in order to come out on top. There are many great gamblers out there who know how to find stock winners and find direction of stock very easy. Ones who can predict sport games very well, and ones who can play poker very well who lose because their money management skills are terrible. And if you have good money management skills but you don't know what you're doing, once again, you're not going to win. You have to be good at money management, and you have to be good at analyzing whatever it is that you're doing. Now, when you look at a football game, you're going to get a line that has minus 110 on it. What that means is, in order to win $100, you have to risk 110 up front. So say there's a game, the Pittsburgh Steelers and the New York Jets. The books say Pittsburgh is favored by 6.5. What this means is if Pittsburgh wins by 7 and you play them, or better, then you will win $100 profit. But if, say, you played the Jets and they didn't cover, you would put up 110. The math on this means that you have to win at least 52.3% of the time in order to break even. Meaning you got to win 11 games for every 10 that you lose just to break even, because if you win one and you lose one, betting $100 a game, you're down $10 or $5 per bet. That's the vigorous that they have. Now the stock market is no different. If anything, it would be different that it is worse. Because if you were to have $100,000 that you wanted to invest on football games, wanting to bet $100 a pop, you would be a fool for putting $100,000 in the account. You don't need any more than 100 bets, in my opinion. This way you have $10,000. If you go broke, that means you got super unlucky, your money management was terrible, or you didn't know what you were doing. You shouldn't be continuing any longer, in my opinion. Where with stocks, you really got to put the money in, because to make $100 on a trade at 2%, you are going to need like at least $5,000, which would be like 50 bets on a football game, and you can have a whole week's full of action for 50 games. Big difference when you look at the two of them. Now the spreads or the commissions that stocks has, first off, you got to pay per trade. You could hear someone say, oh, it's only $10 per trade with this company. And it's not $10, it's double that, because $10 to buy, $10 to sell, meaning you have $20 to execute the trade. Okay. Also, you have a bid and ask fee. If there's a stock that's trading at around $15 a share, if you want to buy that, you got to pay $15.01. And if you own that stock and you want to sell it at that exact same moment, it's $14.99 to sell. Usually a little bit above you have to spend and a little bit below you get when you sell it. Meaning it's much more difficult to be a winner. So therefore, if you were a $5,000 player who makes trades on stocks, and what you're looking to do is you're looking to gain $100 like you would on a sporting event, and your biggest risk you want to put up is $110 like you would in a football game, what this means is when you take the commissions away, when you take the bid and ask fee, you would have to make 2.6%, give or take, to have the profit of that $100. Now, for a $110 loss, which is still $10 higher, you would have a 1.6% risk fee, which is much different, much lower than the gain. which might say it's even harder to bet on stocks than it is on football games, and you have to put up more money. Now, obviously, if you, instead of betting $5,000, if you were to bet $10,000 or $20,000 on a trade, then those numbers would shrink. But what you're doing is you're putting up a larger amount of equity. And if you are holding on to stocks overnight, you are very vulnerable for big moves, meaning you could wake up one morning and see that the stock market's down 3% and you have a big loss on your plate. That's part of the stock market game. So it's a lot more risky, and using the same analogy on football, if you had that $100,000, like I say, you put $10,000 in your account, $90,000 is now left for whatever you think is best, whether it be for buying some real gold and silver, whether it be to have a nice little vacation, or whatever it happens to be. You don't need to put as much money up with that than you do with the stock trading. Big difference there. But the biggest one is how the government or how society in general looks at the two. Because they see stock trading as this is an investment, this is totally legal. In fact, you go to different web pages like TD Ameritrade, Scottrade, E-Trade. You're not going to see on their web page anything about responsible gambling like you will at the Bellagio, which is a casino in Las Vegas. And it's illegal to bet on football unless you live in Las Vegas or you do it online with an offshore account. And the big difference is it is such a huge amount of higher risk to bet on stock markets. So it's really, really difficult for me to see so many people making trades on stocks, not knowing what they're doing, not understanding that it's gambling, and yet it's all so legal. And the government wants to frown upon you if you put $100 up on the Raiders and the Broncos game. Kind of makes you wonder now, doesn't it? Thank you everybody for watching. Have yourself a great day. Bye-bye.